The last couple of days has been really pretty interesting and a bit unexplained. And I think a lot of people are fishing around trying to understand exactly what the weakness is due to. Now, there's been whispers of tax loss harvesting and maybe some funds liquidating large energy positions and the like. And to us, it reads like there is some type of entity or entities that are selling cash stock positions. Now let's explain why. Overnight, on Sunday night, the futures were very quiet, and as the cash market opened, we had a 1.5% downward move. It's a very persistent, consistent selling up until we hit the 4,000 level. Cash market closes, and the futures hardly budge overnight, right? And then on Tuesday, it's the same thing. 9:30 cash opens, bam, market goes down almost 2%. Again, it rallies a little bit into the close, and then look what happens overnight. We pin the second 39.50 big options level overnight. Very low volatility, right? So you have these big volatile movements in the cash sessions, but not overnight futures. And the reason we think this is significant is if you had a situation where oil was moving overnight or suddenly interest rates spiked and that drove some sort of change in macro correlations, you would think you'd see a lot more overnight volatility or changes in volatility, right? But there doesn't seem to be a macro trigger here that is necessarily causing traders in Asia or Europe to really shift big positions. Whatever's happening here seems to be cash stock based positions. And I say that again because this is selling that is occurring from the market open, cash market open to cash market close, and then the flow shuts off. And you're not even getting mean reversion here, right? You're just getting selling and then it's over, right? Something shuts off, market holds, next day, kind of rinse and repeat. Now, one of our first jobs as a broker is we were on what's called a program trading desk, and our clients were pension funds and very, very large asset managers. So, hundreds of billions of dollars, giant entities, right? Like CalPERS is a big one, for example. And so what these funds do is they index funds. And what that essentially means is rather than buying spiders because they're too big, they have to track the S&P by buying all of the individual components to the S&P 500. So if we look at a quick basket of that, instead of saying, hey, I'm just going to buy spiders, they say, oh, I need to buy $100 million, let's say, of all the components of the S&P 500. So as a broker, what you do is they say, here's the $100 million basket. I need to buy 1,000 shares of Apple, 500 shares of Microsoft, 50 shares of ExxonMobil, right? They break it down or break it out. And this works over, the Russell basket or however else they want to allocate money. And the thing is that when you are that large of an entity, you can't just say, hey, on the market open, slam in this $100 million and fill my order immediately, because you could really crush the market, right? You could hit the market quite hard, and that disadvantages you if you're trying to, say, sell a bunch of money, right? You want to try to not have a big fingerprint in the market. So what do? Well, you put your order into an algo, right? Which like a VWAP algo or something. And so what you do is you take the basket of stocks that the big pension fund wants to buy or sell, and you put it in these obviously computerized algos. And what the algo does is says, okay, I need to take out, let's say I need to buy 1,000 shares of Apple for today and 500 shares of ExxonMobil, and I piece that order out over the day electronically, right? So I'm constantly just selling 50 shares at a clip, right? And obviously these algos are very sophisticated and they're doing a whole bunch of things, but essentially what they're doing over the whole day is piecing the order out. And so what you get is, as soon as the market opens, ding, 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 the algos start to sell, right? And they do it persistently over the day. And again, there's sophistication in some of these algos, but the idea or the core concept, I'm going to piece out this order of the day. If I push too much, I could really shove the market down, but I also understand that there's a window here that I need to trade in. So it's a balance. And so what you do is sometimes these baskets will trade over a few days. And so this is what is so interesting and speaks to this idea that it is actually stocks being sold, possibly due to tax loss harvesting or funds being pulled out, cash being pulled out of funds or whatever it may be. And again, we don't know. We're not saying anyone's in trouble or anything like that. It's just this just seems like stock selling to us. And it doesn't, again, have to be margin call related. It could just be redemptions or rotations out of various positions. The point here is that the fact that the selling persists only from the cash open to the cash close is very interesting, and it speaks to this idea that this wasn't necessarily something that you could pick up in the macro data, or that the options market saw and was pricing in higher moves for these days. If anything, the volatility in the options market has been pricing very low moves this week. And so, again, we bring this up because this doesn't necessarily have to be this weird macro event that is taking place that no one understands. It just seems like there are some cash positions being closed, stocks being sold at this point in time. And so if you found this analysis interesting, this is something that we track and we're watching now for our subscribers. Head over to SpotGamma.com, hit subscribe now. You get a free 7-day trial that'll cover you until next week's pivotal CPI FOMC date. And there's obviously a giant options expiration that we're tracking on December 16th. So there's a lot of shifts coming up in the next couple days. And so starting the free trial now is well timed.